I'm Matt Bouchard here in New York City for Nareit's REIT Week 2018 Investor Conference. Joining me today is Mike Landy, President and CEO of Monmouth Real Estate Investment Corp. Mike, thanks for joining us.
My pleasure. Thanks for having me, Matt.
Now, I'd like to start by asking you about the expansion of the Panama Canal and how that's impacting the industrial sector and how Monmouth specifically is positioned to leverage this situation.
Sure. It's a game changer for the whole global supply chain. Even in anticipation of the canal being completed, you saw some of the largest industries in the world shift from the West Coast to the East Coast. Boeing, Airbus, GE. You know, there was a bottleneck of goods trying to enter and leave the country through the West Coast ports. The expanded canal has ships over 3 times the capacity going through the canal, so consequently, shipping container growth on the East Coast is outpacing West Coast growth, even though the West Coast shipping container traffic is growing. On the East Coast, it's growing about 3 times to that of the West Coast. So Monmouth has consciously tilted its portfolio east of the Mississippi. 70% of the U.S. population resides east of the Mississippi River, and ports where we're heavily invested, such as Miami, Tampa, Charleston, Savannah, New Orleans, Houston, are really benefiting. And location's a key attribute of real estate investment, and with the global supply chain moving via the Panama Canal eastward, where the population is, where the more business-friendly climate is, where the rail hubs and just the freightways allow for greater efficiency. It's not efficient to come through the West Coast and move all the way to the population centers in the East Coast. So we're really benefiting, and it's happening faster than some people thought it would.
Now, every real estate sector has, some unique metric or trait about it, and for industrial, building age is becoming increasingly important. Why is that, and how does Monmouth's portfolio stack up to your peers?
Yeah, well, you and I have discussed that in the past, and Monmouth invests in single-tenant net lease industrial properties to some of the strongest companies in the world: FedEx, Anheuser-Busch, Siemens, United Technologies, GE, Amazon, Sherwin-Williams, etc. And so, these become mission-critical assets. And last century's warehouses were largely boxes serving, wholesale distribution, business to business. Now, in this digital era, you're doing that, but you're also doing direct-to-consumer shipments, B2C, and that requires a modern infrastructure. Our tenants invest tens of millions of dollars into each building. They have automated material and handling equipment, 3D printers, robotics. It's just very high-tech. Often the infrastructure investment that the tenant makes is at a greater cost than the building itself. So our weighted average building age is only 9 years, so it's a very state-of-the-art portfolio. And it's a key factor in building a high-quality portfolio going forward.
And lastly, the strong fundamentals in the industrial space are naturally drawing additional investment capital into the space. And we've already seen a public-to-public deal, a company taken private. What's your outlook for M&A and transactions in general in the industrial space in the near term?
Yeah, well, we're a 50-year-old publicly traded REIT, and we've seen through the cycles M&A, increase and abate, and you're absolutely right. Demand is off the charts now. Industrial's in its 9th consecutive year of positive net absorption. We're in our 3rd consecutive year of over 99% occupancy. So demand is so insatiable that the big pools of capital cannot aggregate enough industrial product. We, in our admittedly biased opinion, have the most high-quality industrial portfolio there is. It's very hard to find a single asset that meets our criteria, let alone a whole portfolio. So we're very pleased with our position. Certainly it's a highly coveted portfolio, but we've generated outperformance over the long term, some of the best performance in the REIT sector. And so, we think long term and look forward to seeing what our portfolio delivers in the next 50 years.
Great. Mike, thanks so much for joining us.
My pleasure. Thanks for having me.
For more from Nareit's REIT Week, be sure to visit Nareit's website, REIT.com.